I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on the Crypto Coin Show we have Joshua Tobkin, CEO and co-founder of SupraOracles, back with us once again. Josh, thank you so much for taking the time, and pleasure to see you.
It's great to be here again. It's been a while since we last spoke, Ashton. I think almost a year.
Yeah, and that's like a decade in crypto time, and I know that your team's been working hard, probably building throughout the bear. I'm excited to hear the updates. Would love to kick off our conversation for those who haven't heard our first interview or aren't familiar with SupraOracles on what exactly your team is working on in the blockchain space, and then we'll dive into all the details and updates.
Sure. So what we provide is obviously what are called oracles. And what are oracles? Blockchains themselves don't speak to the outside world, and they don't speak to each other. They're actually closed loop systems. So bringing external data into a blockchain has to be done with a lot of care. You have to be very delicate and really security-minded around that. So we are actually applying layer 1 consensus principles and algorithms to secure external data on chain. And for example, a point like that we really like to make is that your smart contract is always your smart contract that uses oracles is only as good as the data that is secured and inputted into it. So while oracles can allow smart contracts to do so many more interesting things, right? It comes with the risk of you have dropped the layer 1 security guarantee from the underlying layer 1 to the security guarantee of the oracle your smart contracts whose data you're consuming. That's why what we do is really strive to apply layer 1 security principles and level like security guarantees to the oracle level itself. And that's when I talk about oracle data, I'm referring to mostly crypto price data. But I'm also talking about various types of future data that we're working with, such as foreign exchange, sports data. Also, I do want to mention that we handle other types of services. For example, a very popular service of ours is a verifiable random function, a VRF. And we have some other future products and services like that we're planning.
Great intro, Josh. And yeah, about the crypto prices and DeFi more specifically, I feel like that's a really important aspect to touch on. You said there, like without the oracles, you wouldn't be able to get the prices onto the blockchain, right? And I feel like in the same way that there's vulnerabilities in like centralized exchanges, they each have their own price, and there could be price manipulation if the exchange did something bad, or if people sort of had control of that. In DeFi, without the oracles being secure, prices could be manipulated, or people could be able to take advantage of the system, I feel like. So I feel like this is super important, especially in this year, 2023, as I feel like there's a big rush of more people moving into DeFi or trying to find ways to trade non-custodial with all of the mishaps that happened with FTX and centralized exchanges. How far along is your team in sort of making this a reality and making more people understand the importance of oracles in DeFi?
Yeah, so we're very close to go to mainnet alpha, we call it. Which we're really happy about. We do believe we have a couple of surprises for the kind of industry in general at large, because we have some major innovations. We believe that the Oracle protocol itself is very innovative. Actually, believe it or not, we have a consensus algorithm that's custom built for our system, very innovative, and other things like data dissemination and whatnot. And not to mention, we are also working on a new type of bridge. Now, this isn't actually on our website yet, but we call it Hyperloop. And it has a lot of very wonderful qualities in terms of security-minded. Like security is always number one. I should mention that hackers and black hats have moved away from trying to target exchanges, which used to be the honeypot. The honeypot today are these cross-chain bridges. So we've designed a system that is meant to be very secure, but also low latency and high throughput in terms of volume of value that can be handled through that bridge. That's something that we're going to be revealing soon enough. But what we're going to mainnet alpha with in our permission setting, we call it alpha because it is permissioned. Foundation nodes and some of our early partners are going to be participating here for a few months. And then we're going to be progressively decentralizing to mainnet beta, where we move into more of an open participation model, right? In terms of mainnet alpha, like we can call it, so our VRF service is just about ready for mainnet. To service other ecosystems, and in fact, we're able to service at this moment 25 different test nets, and eventually to 25 different mainnets, believe it or not. There's a lot of layer 1s, layer 2 subnets, cosmos zones, parachains, emerging. And these the proliferation of these other infrastructure projects are actually really great for the Oracle business. They all need crypto price data. They all need verifiable random function. We have they want cross-chain communication as well. And there is more to this, but from a timeline perspective, we do think we're going to be live, let's call it by, Q1 of 2023.
Wow, very exciting. And interesting on the bridge aspect as well. Obviously that's important with DeFi still sort of having these isolated silos where it's sort of hard to move funds from one blockchain DeFi to another. And we have seen a lot of hacks and exploits with those bridges. So I feel like, you mentioned it many times, that the security is obviously super important. With the mainnet launch, and you sort of mentioned at the beginning, having like the same security as like a blockchain or like a layer 1 network, how exactly can you get that same level of security as a layer 1 network? Do you do a similar setup where you set up nodes in a decentralized network as you would like on Ethereum, but they're all to protect the integrity of the information and the prices in the oracles?
Yes. So for the Oracle, basically what we do is we organize our nodes into subcommittees, large subcommittees called clans. The entire system is called a tribe. And we reshuffle the node composition often. We also adjust the different clans to be assigned to different commodities, like different cryptocurrency prices or different Oracle data, as shuffled and changed often as well. So this provides us, similar layer 1 security guarantees, but in the Oracle mode. We actually have a shared security paradigm. We also have a model in which is resilient to a certain amount of external data sources being corrupted. So other protocols don't even talk about this. But we have full transparency into where the data came from. We have resilience. If the 2 exchanges failed at the same time, up to 3, I believe, if they failed at the same time and they're all corrupted at the same time colluding, then we might start to suffer issues, right? But other protocols, other oracles may not even be considering that. They only consider like maybe the node operators being Byzantine. But you have to consider both node operators being Byzantine as well as data sources. Sometimes by accident, like Web 2 things fail all the time, right? But worst case scenario would be like an on purpose situation, right? So we do have resilience over that. In order to kind of, in terms of how do you provide like these very, very strong security guarantees for the bridge, or what we call Hyperloop, which we'll have to save for another conversation. But if you go to SupraOracles.com/whitepapers, it should be there public facing within, let's call it 1 month, right? In that case, there is multiple things that we do. We do have multiple smart contracts that are required to be participating. We do have a set of nodes that must participate, and we actually also enshrine an insurance protocol and a whistleblower mechanism. And that's the qualities that we wanted for this decentralized bridge, which we call Hyperloop, and there's a reason why we call it Hyperloop. Actually, it's more of like a tunnel instead of a bridge. The reason why we feel like this is a good model or it's the right trade-off space is because yes, we design a system that is meant to never lose people money. Like that's really the end goal. Now we have to be resilient to smart contract bugs. We have to be resilient to node collusion. So those are the 2 main issues with bridges in general. So that's why we do enshrine in a insurance protocol. But the other attributes that you want to have is that you want to handle a ton of value on a bridge. Otherwise, you break the liquidity across different pockets and pools of funds across different smaller bridges. The thing that I want to mention about the bridges is that you're usually down to 51% of the node operators that are participating in that service, their stake, right? Like you usually need about 51% of them to make a decision. So the maximum value you should only bridge up to usually up to half of the stake of the total set of nodes, 51% of that. Once you go beyond that, the bridge starts to become like game theoretically unstable. Eventually it becomes worth it for the node operators to just cheat and roll, So you have to be careful about that. Now, the common solution, which is reasonable, is this what's called an optimistic bridge, where you do the transaction, you create a challenge period where someone can refute the situation and whatnot. But what you have there as a trade-off is latency. So you introduce maybe a couple hours before that transaction settles, right? But what we want to do is still like have really fast latency. And why is because faster, lower latency meaning faster to finality that you can get. It means your product has the edge. If people are racing to get into another ecosystem, if you're the fastest to do it for a special opportunity, they'll want to use yours more than that. The final component is so I mentioned that do you want low latency? Also, that there's traditionally like this limitation on the amount of value that system can handle. We want to to make this useful though, you want to make sure that the bridge can handle a lot of value transaction volume, in a 24-hour period, for example. So there's some interesting things here. Would love for your audience to check it out at SupraOracles.com/white papers. It'll be publicly facing in about a month, but this is another major service we want to roll out. That is, what we're trying to do is we are still applying layer 1 principles, but there are different trade-offs. For example, these nodes have to run the Supra as well as the destination chain, full nodes. But the more in that material that should be publicly facing in about 1 month.
Wow, very exciting, and I know it will come very quickly as crypto does fly. And I really love that analogy of sort of like Hyperloop compared to like a bridge. As bridges are sort of like the old school way to get across water, and I feel like Hyperloop is going to be much faster and better in the future. So I'm looking forward to seeing it launch. And you mentioned there about having a node on Supra and having it on these other chains as well. From what I understand of when I'm using DeFi or doing swaps on a decentralized exchange, the Oracle stuff, traders don't really see it on the front facing. It's like it's the underlying technology, but you don't really know, exactly where the price feed is coming from. You just have to trust that it's reliable. And as I was saying about how there's sort of these isolated silos in DeFi, you're on Uniswap trading Ethereum tokens, and then you go to a different decentralized exchange to trade different tokens. There's so many different blockchains that are continuing to grow out their DeFi ecosystems. So does the SupraOracles technology, do you have to make agreements with a new blockchain to make sure that it's compatible with it? Or as DeFi continues to grow in these other blockchain ecosystems, like Cosmos, Avalanche, Near, all these different blockchains, do you have to partner with them, or can they just pick up the technology? How does that work?
Yeah, so Supra does a lot of the work on our side, and we deliver our data to other ecosystems. These other ecosystems are almost all permissionless, and they're also very open and eager to invite new Oracle solutions into the marketplace to provide optionality for gaps on their ecosystems. So we do seek out partnerships. We do want to work with everyone. What's nice about being an Oracle is that it has a credibly neutral third-party infrastructure that is using layer 1 consensus principles. We do play very nicely with many ecosystems. In fact, our Oracle service is on 37, I think almost soon to be 40. Layer 1, layer 2, 7, 5, layer chains, X, Y, and Z. Yeah, we get to work with many ecosystems. That's actually something that I've been enjoying in part of what we're doing. The key here to make it work is that destination chain that we service has to be compatible, and if it is, great, we're in business. So some ecosystems are harder to integrate with than others, but there's a lot of them that are EVM chains, or ecosystems. So we're compatible with EVM, so that's how we're able to deploy so quickly there to multiple different types of networks.
Yeah, and it's crazy the amount of different layer 1 networks popping up and just hoping that they become more interoperable each day, because you fire off 40 layer 1 networks and I'm like, oh my gosh, there's so many. It was easy when there was 10 to try and remember them, but as it continues to expand, it's just hard to keep up, especially with all the different projects coming up. So I'm glad your technology is able to incorporate into the greater DeFi ecosystem, as I feel like it's an important time that, as I mentioned at the beginning, people are starting to have less trust in centralized exchanges, or also decentralized exchanges in DeFi. It's just becoming, the borders are dropping down, the barriers are dropping. It's easy for people to be able to trade between different ecosystems using things like Hyperloop and not have all these technical barriers to entry. I feel like there's like less than 1% of people that are in crypto have actually used all the intricate DeFi tools. So it's very early in terms of crypto still. Most people are just still using an exchange, or they just bought Bitcoin and they're holding it. But this is going to take it to the next level.
That's right. That's right. And speaking of which, two things. I do want to mention that we were also deployed on the Move base chain, so Aptos and Shui testnets for them both. We also think the Move language is very promising. So I just want to make that clear. And then finally, the one last thing that I definitely want to share with everyone of your audience is really exciting, is that we have a gamified learn to earn program known as Countdown to Blastoff. We had launched it like about 10, 12 days ago. We ran it for a couple of days. We originally had a goal of hitting 50,000 KYC participants within 6 months. We actually ended up with over 220,000 participants in like 4 or 5 days. Wow. Yeah, almost a 250,000 in a couple of days. It's actually one of the faster growing. If you look at the growth charts of like various things, you have GTP, which grew 1 million in a week. I think we could have hit about 300,000 in a week if we ran it consistently. And then you have Facebook. Actually, apparently this is a faster growth trajectory than Facebook. Anyways, it's really fun. What's really interesting about that is that it is gamified. It is fun. It's really creative. Mm-hmm. And it does show that kind of embedding kind of a learn to earn program, instead of just giving airdrop tokens away, can incentivize people to take action, which is interesting. Just because they want to have access to the information early, etc. So yeah, we're launching our Blastoff program. It's very, very exciting. It's very fun. It's gamified. It has all kinds of like 8 Easter eggs. You can win a Toyota Supra vehicle. We're giving away Supra. We're giving away a bunch of Razer computers. Razer is one of our backers in our seed round, and we're going to be giving away like a bunch of laptops, etc. and other things. So stay tuned for that. Look for Ashton's link. He'll share the link to the program when this video is live, and sign up to that. And yeah, definitely looking forward to welcoming you into our community.
Yeah, no, that's very exciting, Joshua, and I will leave a link in the description box for that. It's great to have, incentivized learning. It's fascinating to learn about all this innovative technology, but when you're rewarded with tokens of a huge network that's not released yet, that's like pretty good incentivization to learn your stuff. So that's exciting. I will follow along for that. And I'll leave the link in the description. I've taken a look at it, and it looks really exciting. And I'm personally excited for the mainnet alpha in about a month's time. So thank you so much for all this information, Joshua. Is there any last words on what you're most excited for with SupraOracles and just with 2023 in the crypto space?
Yeah. Basically going to mainnet is really exciting and fun. Building this community through Project Blastoff has been really, really fun. And from a tech perspective, like going from idea into finally like implementation and materialization is really kind of cool because this stuff is high performing. We have metrics that are incredible. We've run tests on wide area networks of like over 200 nodes across the world and things like this. And we know that we have a lot of like technical advantages over some of the competition. But Supra, just so you notice I'm talking about Supra, not necessarily just for Oracles. Oracles is one of our main products and services, but there's other things that we're going to be doing. In fact, I think Supra itself is going to have the most revenue streams of any infrastructure project ever. Wow. Because we get to service all these other ecosystems, Oracle, VRF, cross-chain communication, and also automation. That's another conversation for a bit later. But this material will be dripped and released on our website, supraoracles.com/whitepapers. And there's a lot of great stuff there. I think, just so we try to create a video, we try to create a long form blog post, aka light paper, and then we also have a full-on like academic level white paper itself. We try to do that for each of our core protocols, but we have like six of them being published in the next several months here. So stay tuned for that. Yeah, and thanks a lot, Ashton, to reconnect again. It's been a while, so it's really great to chat.
Yeah, thank you so much, Joshua, for coming on. And I'll leave the link to the white papers and the platform in the description box below as well. All the best with the upcoming mainnet alpha launch and all these other revenue streams. I'm excited to see what's in store. So let's definitely follow up in the near future.
Great. You too. Bye-bye.